A very good evening to you and welcome to The Bottom Line, a wrap of the business news of the day. Markets are closed, so not much happening there, but lots to talk about in terms of financial freedom. So this Freedom Day comes as many South Africans find the whole idea of financial freedom more elusive than ever. COVID-19 has created market turmoil around the world, wiping off the investments of many, and the lockdown has created joblessness, with many wondering where their next paycheck will come from. With this in mind, FNB Consumer Education Program Manager Dhashni Naidoo has come up with 7 things you should not be doing with your money right now. She joins us on the line. Dhashni, thank you very much. Let's bring up the first pointer. You say, don't cancel your insurance, and that's very tempting. Why is insurance so important right now?
So, insurance protects us against risk, various risk. It also provides medical support and financial support when we need it. So I think cancelling, it is tempting to cancel insurance at the moment in order to maybe free up cash. But I think that we should be careful about doing this. Once a policy lapses or you cancel it, you expose yourself and your family to even greater risk. And so what may result in future when you're wanting to take up an insurance policy again, it might result in, waiting periods or penalties and even higher premiums possibly. So our advice is contact your insurance provider and look at an option of maybe reducing your premiums as opposed to cancelling a policy entirely.
Are the companies being flexible? I mean, there are some options out there reducing your premiums, but you reduce your cover as well.
Yes. So there are various options available, and I think it would be prudent for consumers to contact their service providers to see exactly what the different providers are offering at the moment. There's so many developments in the market at the moment in response to the current situation, and various service providers have been responding at various levels. So I think what's important is for a consumer to contact their own service providers and see what is available and what options they can exercise at this time.
All right, let's look at another one of your pointers. Don't take on unnecessary debt. I guess that's an important message to hear, even when the squeeze is on.
Yes, I think it is tempting to take on additional debt to cover, the cost of living. But I think what's important to remember is that we have existing debt. Many of us have existing debt that we need to service, and we need to ensure that we're still paying off and maintaining. So look to other relief measures that can assist. Government has offered various relief measures. The financial industry is offering various relief measures. So our advice would be try to honor your existing debt. Look at what relief measures are available to you, as opposed to going out and using credit for consumption purposes.
Yeah. Okay, don't make big financial decisions in haste. Another one, what does that mean? I guess don't sell your house, don't come up with any sort of knee-jerk ideas right now.
Absolutely. So I think these are unprecedented times, and we're uncertain of what the future may hold, so particularly for jobs and income. And so in this time of uncertainty, I think what's important is to exercise extreme caution about spending and be conservative about what we can afford also. So this is why we say don't think about making any big financial decisions at this point. Rather try to maintain and consolidate what you have and how you can manage your existing finances. And if you are thinking about any big financial decisions at the moment, I guess one of the questions you can ask yourself is, will you be able to sustain this should there be any changes in your income, before you decide to go out and invest, make big investments or purchases?
Okay, another one, don't stop investing. And this is so interesting because the markets are a mess. People have lost, in some cases, a big portion of their life savings. So convince us of the merits of staying in the markets or even getting in.
I think one of the risks of stopping investments at the moment is that what you get out now is what your investments are showing at this point, and we know these are particularly low at the moment. So if you do decide to disinvest, you're suffering some losses. But if we wait a bit until the situation recovers and markets recover, what we will see is our investments growing again. So I think it does take a little bit of patience. What we would also recommend is, seeking advice from financial advisors who are trained and knowledgeable on these matters. So before you make any decisions to stop investments, especially in things like retirement, we would urge you to contact your providers, contact a financial advisor to seek advice on what the best options are.
And you say don't take advice from family and friends.
I think family and friends, although well-meaning, aren't necessarily the right people to get advice from, purely for the reason that many of them are not trained, do not have the necessary knowledge and skills to be providing financial advice. We also see various changes within the marketplace, as I mentioned earlier, and financial institutions responding to the current situation. And so there may be also changes to the kinds of products and services that they are offering. So rather go to the professionals, speak to financial service providers, banks, insurance companies, etc., to get proper advice. So even though our family does mean well and we do trust our family and friends, again, get professional advice.
And very quickly, let's end with this. You say if you need help, get it. And in time, how do you know when you're in that situation?
If you're already feeling overwhelmed by your ability to meet your financial obligations, then you should be contacting your service providers to alert them to the fact of changes in your income. As you mentioned in your intro, many people have had a loss of income or a reduction of income, and this has a knock-on effect on our ability to repay against our financial obligations. So the prudent thing to do is not sit back and hope that this will recover in a couple of weeks. Rather, contact your service providers, alert them to the situation that you're in, and try and seek some sort of support or interim resolution to helping you cope during this period. It also
thank you very
shows
much.
Intent on the side of the consumer.
Of course. Thank you very much. That was FNB Consumer Education Program Manager Dhashni Naidoo. All right, so not much happening on the local market. Let's take a look at global business news making headlines, and the US in focus. The United States unemployment rate is likely to hit 16% or higher this month. That is a huge jump if you look at unemployment in the US before the big lockdowns, before COVID-19. According to a White House advisor, big, thoughtful policies will be needed to rebuild confidence.
U.S. Treasury Secretary Steve Mnuchin said he expects the economy to start improving shortly after the country comes out of the lockdown.
This is an unprecedented situation. This is not a financial crisis. This is we shut down. So the traditional economic models may work, they may not work. What I do think is as we open up the economy in May and June, you will begin to see the economy bounce back in July, August, September. And my expectation is that you'll see an increasing rate of growth in those 3 months.
But White House economic advisor Kevin Hassett is less optimistic about a quick turnaround even after the lifting of the lockdown.
I think that the next couple of months are going to look terrible. You're going to see numbers that are as bad as anything that we've ever seen. I think the unemployment rate is going to jump to a level probably around 16% or even higher in the next jobs report. I think GDP growth in the second quarter is going to be, negative, big number. Wall Street estimates are negative 20, negative 30% at an annual rate. And so that's because we've done something that's really unprecedented. We've basically stopped everything. And so output has kind of gone to zero for huge swaths of the economy. And so that unprecedented move gives us a really, really big negative shock. But the good news is that all of these policies that we've adopted have hopefully built a bridge to the other side of that stop. And if that's true, if the bridge is effective, like with the small business loans, the PPP loans they're called, then we could conceivably turn back on in a way that really shocks and surprises economists.
The U.S. has activated a stimulus package running into billions of dollars, but the worsening COVID-19 numbers have put a damper on the economy. Before the coronavirus, the growth rate of the U.S. economy had been steadily on the upward trend, with unemployment rates coming down.
Well, Venezuela was struggling before. Now Venezuelans are reportedly paying above $2 per litre for gasoline this week amid fuel shortages. Now, it's one of the highest rates in the world, and this is a very dramatic reversal for an OPEC nation that has long boasted of having the cheapest fuel in the world, thanks to heavy subsidies under socialist former President Hugo Chavez and his successor Nicolas Maduro. Fuel sold by the state oil company, which has a legal monopoly on those sales, is essentially free in Venezuela. Many motorists offer pump workers tips of snacks or a few hundred bolivares instead of payment. But the country's 1.3 million barrel per day refining network has all but collapsed, and U.S. sanctions aimed at ousting Maduro have complicated fuel imports, prompting Venezuelans to either wait hours or days outside stations to fill their tanks. European planemaker Airbus issued a very bleak assessment of the impact of the coronavirus crisis. The company's 135,000 employees have been told to brace for potentially deeper job cuts. In a letter to staff, the chief executive warned that Airbus's survival is at stake without immediate action. Well, Fourier, the CEO, also said that Airbus was bleeding cash at an unprecedented speed. The letter was sent to employees later on Friday, just days before the company is due to give its first quarter results. The pandemic has left airlines struggling to survive and virtually halted jet deliveries since mid-March. Airbus has begun implementing government-assisted furlough schemes, starting with 3,000 workers in France. Industry sources have said a new restructuring plan similar to its 2007 Power 8, which saw 10,000 jobs cut, could be launched. And I mean, a few months ago, nobody would have pictured any of these, either of the two big plane makers in the world in this sort of situation. But that is what Airbus is looking at right now. All right, thanks for being with me. That was Bottom Line Business News Chat.